Good day to one and all. This is Dr. Sivaraman of iknowindices.com. We are into the week of 5th to 9th of June. Yesterday, I was supposed to give the Asian session live market analysis and the forecast webinar. Due to some other work, I was not able to present it. Today is 6th of June. I am presenting the webinar between 5 and 5:30 GMT, giving the expected market moves for this particular week, and also the range in which the currencies are expected to swing in this week. I'll discuss. So if you watch the market now, I was telling you on last Friday that for non-farm payroll, they are expected to gain the levels in the case of Euro and GBP, and also in the case of USD. That's what they had done it on last Friday. And you will be wondering, then how come without knowing the numbers, such forecast is being given? See, first of all, you have to understand the numbers are used as an attribute, and also the time at which that number is going to be announced is considered as a trigger time. So they use such news as a market trigger, and the players try to make moves variedly against the expectations or in line with that of the expectations of the traders, and then make the moves. But if we carefully read their intentions, then we will know that the number, they simply discuss it without giving much significance to it. And only the trigger time they give importance. And that trigger time, if you watch carefully the intentions or read carefully their intentions, we know very well, okay, they wanted to make an upward move or a downward move. We'll be able to predict it following that of the type of moves they are doing it, and also the trend they are doing it in a long term. As I explained to you that they wanted to do the shift in trading zone. So after gaining the levels last month, they started making that downward move now. After booking the profit at the higher levels, then they started dropping the market slowly, inducing the traders to take long position and quickly make a drop, so that those who had taken the long position will come and liquidate the long positions and then accumulate those sells as the lower level buy. Then the players continue to gain the level to the middle level again. So this is how they wanted to do the middle level consolidation with either way stop loss. So whether it is non-farm payroll or FOMC or interest rate decision, whatever it is, that all will fall in line with it of these moves. So irrespective of the data, they will try to make the moves of their own. And so when they wanted to make a shift in trading zone on the higher side, then if the non-farm payroll is really good, more than expected, probably they will simply make a small dip intraday and then start gaining the level, telling that already the price, already the information is structured into that of the price or incorporated into that of the pricing. That is how they will give the interpretations. So we have to forcibly believe whatever the attribute they give. So ultimately, everything is nothing but attributes. All the talk which is happening in the market, they are all nothing but attribute. It is something similar to that of excuses. Suppose somebody has walked along the road and slipped and he has fallen. Then if you ask him why he has fallen, have you not watched the road? He will simply say that there was a stone block which I did not notice, because of that I had just fallen. So normally what that person who has fallen tend to say is, the block has really made me to fall. but it is inert, which is simply staying there. But he has not looked into it because of that is clicked. So this is the normal way. When we have some problem, we always accuse others and say that they are responsible for my problem. In the same way, the market has got the excuses from that of the data and from that of the technical analysis. In the technical analysis, you come across the overbought, oversold conditions, or the Fibonacci retracement, or MACD crossing, or whatever it is, and they're all nothing but the attributes the players use from time to time. Whichever they want, they will use it. So sometimes they may use the fundamental, certain other time they may use the speeches, and certain other time they may say that the economic events or even a natural calamity or sudden attack and things like that. They can use anything as an attribute in order to facilitate the move according to their wish. Suppose they accumulated huge buy positions, and if there is a negative news in the market, they will not drop the market. And simply what they will do, they will make an upward spike in the market. And you know that when Britain was trying to exit, and the outcome of the voting, which was for the exit, they made a very quick upward rise because they wanted to offload the positions, and then later on they made the drop. So this is the normal way they try to make moves in the market. So we need to understand that the players are using various type of attributes in order to give life to that of the market. But we should not be carried away by that of the attributes. That is what I am trying to tell you. And we have to focus only on reading their intentions. Then we will find we become a master in understanding their moves, and we can trade at ease. Now, as far as the forecast is concerned, there is a question from Bren. Do the players have a bigger interest in certain news release than that others? Nothing of that sort. Because, see, you know that for the past 7-8 years, they have been giving importance to that of the non-farm payroll. Before that, they have been giving importance to that of the interest rate decision. You know that interest rate, they have been dropping. At the time, they give importance to that of the interest rate decision. Even now, they are giving importance to that of the interest rate decision because there could be an increase in the interest rate. And before that, they have been giving importance to that of the GDP data and PMI. So from time to time, they try to focus on various type of data which are being released regularly, and they highlight it sometimes. Then the consumer sentiments, they have been giving much more importance than that of non-farm payroll. That is about 11, 12 years back. So the consumer sentiments were being given importance. So each time they will pick up something. So now when everybody started following non-farm payroll, they are making nominal moves of 30, 40 pips and 50 pips and things like that. Then they will try to give importance to the speeches. And those of you who have been following GBP might be knowing, when King was making even one announcement, immediately GBP used to fall in a big way. That is how they try to make moves in the market. If he opens the mouth, that's all, they will make the drop. And this is the way the players make moves in the market using such attributes. So from time to time, they will use various type of attributes. So you just don't give too much importance to that. Instead, you understand they are all trigger times, market trigger times. So during market trigger times, you need to read the false move to understand their intentions. If you understand they are making a downward quick false move, then buy. They will make a quick rise. You will be able to profit. So focus on the false move during such time. James has got another question. What are your thoughts on price action as part of the strategy? See, price action, there are various ways of price actions. They make small consolidation, about 2 to 5 pips price action, and that is mainly to give impression to that of the traders the market is alive, you can take positions. Then they make about 30 to 40 pips or 60 pips swing either way. That is before that of the data release. They make the price action for you to really get confused and tensed, so that once you are emotionally triggered, then you anticipate the market to come down and take a sell. Immediately they will take it up and quickly trap you. And if you anticipate the market appears technically that it will come down and take a sell, they will make a rise. If you take a buy thinking that it will go up, they will make a drop. So they may follow the fundamental, and they may simply say that it is due to technical, the market has corrected. So that is with regard to the small price actions. And there are bigger price actions like spikes. And all quick moves are false moves in the market. So whenever they make a very quick upward rise, understand they want to make a drop afterwards. And USDN, you know that they gained quickly the level in order to make a drop. So that way you will be able to understand whatever quick moves they make, the opposite is their intention. So if you keep these informations as the prime events to read their intentions, then you will be able to really understand what they are going to do it. Besides the forecast, I have given it session-wise forecast, and follow these session-wise forecast, you'll be able to fine-tune the forecast using our market reading. Then you find that you can really do session-wise trade or swing trade, intraday trade, or a position trade. And in all trades, you will be able to see the success. But in order to avoid the traders making successful trade, what the players have done, they started giving free technical analysis using various websites. And of late, for the past 10, 12 years, you know, the technical analysis is available. If I remember correctly, about 15 years back, people used to subscribe for technical analysis, about $100, $200 per month and things like that. They will show various charts, and charts were not available free. But now everywhere you come across the charts, but they are restricted to quote pages. They are not giving the true quote page containing the bid and the ask, high, low, the net change, and also the GMT time. But all other things, charts, they are giving it free of cost because they can easily misguide you. They want you to get diverted. So suppose somebody wants to flick a pen from you, and he has to first of all divert you. And he has to say that, see, something is happening over there. You focus on that. At that time, he'll take away your pen. So you always understand in cheating, the most important thing or the technique of the person who cheats is capability of diverting. And in that capability of diverting, you should present it emotionally so that you get convinced and get diverted. Otherwise, simply you will discount it. So they have to do it vociferously. Only then you find you get diverted, and later on you find you are trapped. So this is the normal phenomenon by which they are able to successfully earn for several years. And of late, what has happened when the people have lost money, then they shy away from that other market. In such a situation, the volume comes down. Then new traders have to come in, and they are also becoming abundantly cautious because the earlier traders say that, no, it is not the place to earn money. So they get discouraged, and they try to find out they should not also become a victim of this act. So if you go to the gambling den, you know that when the gambling den was started, in 1980 and 19, things like that. People used to make a huge crowd there, thinking that they can make it as a full-time job, making gambling and earn money. And the gamblers, what they have done, they ask their own people to play in front and accumulate money. So that will give the trigger for others who come in and think that, yeah, I think we can also make money like this. This man is able to make it. So he watches his action for about half an hour or 1 hour. Okay, this is the trick. Okay, let me do that. Then afterwards, once that fellow started betting, you will find the trick will change, and later on you will find he started losing all the money what he has brought. So this is what happens, and later on you find such gambling dens are not at all popular nowadays, because people found that by trick the gamblers are able to earn money, and later on they find that nobody will be able to make money in the gambling then. So probably they just go there as a sightseeing place, nothing more than that. Or bet only about $5, $10 and get away with that. So similarly in the market also, you find when the traders found that it is next to impossible to make money, then the players have got no other option than to attract the traders. So that is why you find all the platform providers started giving bonus for accounts. So if you open an account with $10,000, they are willing to give $500, $1,000, sometimes $10,000 itself. But what they do, once you commit the positions, start taking the positions, and when you are taking more position, thinking that you will be able to earn more money with the bonus money, which is non-withdrawable, then once you have got a narrowed margin, they will withdraw your $10,000 and say that, no, you do not know how to use the margin what you have provided. You have got only $20 margin. Unless and otherwise you don't pump in the money, your positions will be closed. So they keep the knife over that of the neck and ask you to deposit the money or lose your money. So this is what they have been doing, and that trick also people have understood. So nobody is fascinated with 100% bonus. So now you come across displays stating that they will give you $30 bonus, $50 bonus, etc. So ultimately, when the traders' volume has come down, so the players cannot make big moves. What is the purpose of making big moves? Unless and otherwise they are not able to make money, there is no point in it. But still, as long as the market is there, they have to manipulate the market. And still, we can read the manipulations. And once you read the manipulations, you can earn in a small way without giving much impact to that of the market. Take small quantities and silently earn the money and go away from there. There's another question. Whatever thought, okay. How would you identify false move, momentum and spikes? And what time frame do they occur? Oh God. These things, James, I just explained it during that of my webinar, Tracking the Forex Market Together. During that, the type of moves, how their type of moves are to be identified, I explained it because I don't have much time to explain all those type of moves now. False moves are quick moves, and the intentional moves are slow moves. You kindly listen to that of the Tracking the Forex Market webinar, which are recorded and displayed in FX Street as well as in YouTube. You will be able to get that information. Now, this week forecast, yesterday they have made the swing and firm up and slide and again firmed up during that of the US session. And today they are expected to make a swing and drop. Then already they have made the drop in the case of USD and GBP and Euro. They will make a drop as a contrarian move. Then later on they will try to swing and rise and firm up during that of the European and the US session. And June midweek they are expected to make the firm up and then continue to and firm up, rise during that of the European session and then slide during the US session. Then continue it as a dip during start of the Japanese session on 8th, and then rise, and then continue to rise on European and the US session. On the last day, they are expected to pump initially during Japanese session and start making the slide. So they will make the profit booking moves on Friday. So you can do the buy and sell trade during the rest of the days, excepting Thursday and Friday. Thursday they will make, Wednesday onwards they will make the slide, and then quick rise you can take sell, then do the sell and buy trade. You'll be able to quickly earn money. This is a larger picture of the forecast. Then next week also they are expected to make the swing and rise, but they will not make continuous rise or continuous drop. Now at the moment what they are doing is they are doing either way, middle level consolidation with either way stop ends. So in this middle level consolidation, in a range of 200-300 pips, they make upward stop and followed by downward stop and again upward stop and followed by downward stop. And so the range of swings will be for about 300 to 400 pips. If you look at the chart, you will be able to understand the chart will show this way. And lower level consolidation will be a lower level 100 to 200 pips with a frequent downward stop, and then shift it to that of the middle level and a wider range of middle level consolidation with either way stop. And then later on, from third or fourth week of June, they will start gaining more levels and make higher level consolidation with frequent upward stop and offload their buy positions. And Bren has got a question. Would you say it is fact that 95% of all traders don't make money? Yes, it is a fact. Those who follow technicals and fundamentals, they don't make money. Probably it may appear I am very blunt, but I am a statistics professor. I should not really comment on statistics. But what happens is the manipulators make the market appear following statistics and suddenly trap the traders. So by following it, you might be able to earn, then later on we might get trapped. And then the only way is read their intentions so that you will be able to know when they are going to trap it and when they are going to give the money, you will be able to understand. And if you follow that overall trend in the market and read their intentions by market reading technique, then you will be able to really make money irrespective of the type of moves they are doing it. So the range in which the currencies are expected to swing in this week, so they could come down to 1.1075 and the high could be 1.1350. In the case of GBP, still the downward potency is there, 1.27 they could come down, and the upward potency they may go up to 1.30. And in the case of yen, they have come to 110 and slightly below now, holding it, and they will recover from there and go to 112. After making a downward stop, and they will make drop in the case of euro and GBP, later on gain the level first in USD yen, and then followed by euro and GBP will gain the level. That way they handle all the yen crosses. Then USD CHF again from 96 they will start recovering on the upside. Then Canadian dollar, they will make further downward move to 1.33 level and then make wide range swings in the higher level consolidation. Then in the case of Australian dollar, slowly they will gain the level from that of 0.74 to 7576 and quickly go to 77 in coming days. Then the market trading. So I note down the initial lows and the highs around 3:30 GMT, and afterwards they are being used to read the intentions of the players. How now I noted down the low around 3:30 GMT. Now current time is 5:24 GMT. Okay, 2 hours, almost 2 hours lower. 1.1254 is the low, which is not breached, which is slightly lower than the yesterday's low. And today's high is also slightly lower than that of yesterday's initial high. And they formed the initial high 1.1270 and they breached the high and holding above there only by 5 pips and holding above. So that means they do not want to go further higher. They will simply hold in this range for 2 hours as an extended move, started making the slide. This is what you can read. You just follow it and see whether they are making that. Then you will be able to understand this sort of market reading is really helpful. Then in the case of GBP, 1.2894 was the initial low, which is slightly higher than that of yesterday's initial low, 1.2860. And the high was 1.2877 yesterday. And today's high is 1.2924. They just breached the high and went above, and holding above that of the initial high, 1.2924. So they are making a brief upward stop, and they wanted to make the slide later on without breaching then new high what they have formed for 30 minutes. Now we find that yesterday they have been initially on Monday they have been holding high euro and holding low GBP, and later on they reversed it during US session, rising GBP and dropping euro. And today they are just keeping a nominal gain in the case of euro, more gain in the case of GBP. They will slowly slide euro first, followed by that GBP will make the slide later on. So if you watch carefully these levels, you will be able to understand up to what level they will go and then reverse it. So they have gone up to 1.2931. See that 1.2931 is not breached for 2 hours, then it will start making the slide. That is an extended move for 2 hours. In the event if they breach and slowly they continue to gain, then it is intentional move on the upside. You will be able to differentiate the type of move. But cutting the high, they made it very quickly. So it is supposed to be an extended move for 2 hours, and later on they're expected to reverse. In the case of yen, 109.98 was the initial low. They just breached, came down to 109.73. They are holding below that 109.98 for 2 hours and then start gaining the level. They are going to hold it for some more time, and US session they will start gaining it. So in the case of yen, and only during Japanese and the US session they will be making very active moves, and during that of the European session they will be consolidating. Then in the case of CHF, 96.24, 96.34 is the low. They just breached and came down to 96.28, and they just come up to 96.34. So that means they just made a brief downward dip or a stop and then started gaining above the initial low. Slowly they will cut the high and go down. Then USD CAD 34.68 is the low. They just breached and came down to 34.58 and holding below that of 34.68, and so they are expected to hold and slowly come down. And 34.82 is the high that is not being breached. In Australian dollars, 74.58 is the low that is not breached. 74.92 is the low in a high they set initially, and that is being breached and went up to 74.97 and still holding around 74, 92, 93. And then if they hold above for more than 30 minutes, then slowly they will gain the level in the case of Australian dollar. So you could come across the contrarian move, euro and GBP making the slide, Australian dollar gaining some level, and USD CAD losing some level. That sort of moves they could do it. Euro, GBP and USD yen they could make downward move. So every day if we note down the initial lows and the highs, you'll be able to read up to what they are going and which currency they are handling. You'll be able to find out, okay, why they are handling this currency. GBP higher, euro is lower. This is mainly to drop euro GBP cross. So you'll be able to understand what are the currencies they are handling by doing this. In the recommended trades, a quick upward stop and try to take a sell, quick downward move, try to take a buy. You'll be able to book profit. In an alternative move because they are going to make wide range swings till next week.